Hello traders, you're welcome to this video and I especially welcome you back to the Forex Geek channel. So in this particular video, we are going to be diving deep into an effective momentum indicator that every trader should know. And that is none other than the Williams percent range. Okay, so I'm just going to add the Williams percent range to the chart right away. So this is the Williams percent range indicator. Okay, it's a momentum indicator developed by legendary trader Larry Williams. All right, now this indicator is designed to measure the level of the closing price relative to the high-low range over a specified period. Okay, over a specified period. Now, if we go to the settings of the indicator, you will notice that there is a box for period. Okay, now as we can see, the default is settings. The default settings is 14 period. Okay, the default settings is 14 period. However, you can modify this according to your taste. Right now, the values of the indicator, as we can see, it ranges from 0 to -100, with readings closer to 0 indicating an overbought condition and readings closer to -100 indicating an oversold condition. Now, unlike some other momentum indicators, the percentage R, that is the Williams percentage range, okay, is plotted in reverse. All right, if you are familiar with other momentum indicators, you will notice that the way this momentum indicator, the Williams percentage range, the way it is plotted, it's quite different from some other popular indicators. Okay, now for the Williams percentage range, high values are overbought and low values are oversold. All right, now you can see that the Williams percentage range is plotted from 0 to -100, not from 0 to 100. Because as for other indicators, you will notice that the 0 is usually at the bottom, while the 100 is usually at the top. But you can see that the Williams percentage range is the reverse. Okay? So in simple terms, Williams percentage range helps traders identify when the market might be due for a reversal, making it a great tool for timing entry and exit points in your trades. Now that we know what Williams percentage range is, let us talk about how to interpret its values. Okay, now as for overbought zones, now overbought zones are between 0 to -20. All right, when the indicator moves into this zone, it suggests that the market is overbought. All right, and it could be due for a price correction or reversal. Okay, now in the case of oversold, it is when the the indicator is between -80 and -100. The oversold zone is between -80 to -100. Now this zone signals that the market is oversold and could be primed for a bounce or upward reversal. Okay, now let us look at a very quick example. We can see that around this time when the price dropped to this point, it was coinciding with the Williams percentage range getting into the oversold territory. All right, and you can see that just shortly afterwards, when the Williams percentage range climbed above the -80 level, you can see that we had a reversal to the upside. Although this was a consolidation period, as you can see, we can see that we had a consolidation period around here, right? We had a consolidation period, and just shortly after the indicator entered oversold territory and pointed upwards, you can see that we had a breakout to the upside, right? You can see that we had a breakout to the upside. And then here again, you can see that right after the price dips to this level and the Williams percentage range entered into oversold territory, shortly afterwards, after it climbed back above the -80, we had an upward move. Okay, you can see that we had an upward move. Okay, so keep in mind, however, that overbought doesn't always mean that the price will drop immediately, and oversold does not guarantee a rally immediately. Okay, now this signal should be confirmed with other indicators or price action before making trading decisions. Okay, now let us talk about how to use Williams percentage range in your forex trading strategy. First of all, like I already mentioned, you can use this indicator to identify reversals. Okay, basically when the indicator moves into the overbought zone. All right, let's look at this example. You can see that when the indicator moved into the overbought zone, it signaled a potential reversal to the downside. All right, and then around that time, you can see that we had the price getting at a resistance, getting rejected around the resistance zone, and you can see that after the indicator dipped below the -20 level, we actually had a reversal to the downside. Okay, we had a reversal to the downside. Conversely, when the indicator enters the oversold territory and begins to move upward, it could indicate a long trade, and you can see we had a bullish move. Secondly, you can use this indicator to spot divergence. Okay, you can look for divergences between price action and the Williams percentage range. For example, if the price is making higher highs, but the Williams percentage range is making lower highs, it could indicate a weakening trend. Okay, let's just see if we can find such example. Let's just see if we can find such. If we don't, we're just going to proceed. All right. So, let's see. I think we might need to proceed. We might need to proceed. I'm still looking for possible divergence between the price and the indicator. Okay, let's just go to, okay, I guess I found one here, right? So you can see that the price was making higher highs and the Williams percentage range was making lower high. Now this shows that there is decrease in bullish momentum, right? And the bearish momentum is beginning to gain dominance. And having found this divergence, it indicated that we could have a bearish reversal soon. Okay, and shortly afterwards, we can see that we actually had a bearish reversal as the price dipped. Okay, so you can use the Williams percentage range to actually spot divergence. All right, now of course, the reverse is the case for a bullish divergence. That's going to be when the price is making lower lows while the indicator is making higher lows. Okay, now let's talk about settings. Okay, the default settings, as we already looked at, is 14. Okay, the default setting is 14 periods, but you can adjust it to suit your trading style and time frame. For example, if you are a fan of short-term trading such as scalping or day trading, then you might want to try reducing the period to 7 or 9 for more sensitive signals. Now, it doesn't mean that you can't use the default settings, but if you want faster signals, if you want more sensitive signals, you can decide to reduce the period to 9, right? And you can see how the 9 period, you can see the difference. This is going to give you faster signals, more sensitive. The lower the values of the period, the more sensitive the indicator is going to be, right? And then if you are a fan of long-term analysis like swing trading, a 21 period setting might work better to filter out noise. So let's just look at the 21 settings, and you're going to see how the indicator is going to react to that. You can see that this is going to give you slower changes. The indicator is going to be is going to change slower. It's going to be less sensitive, basically, all right, as you increase the value of the period. So you might want to experiment with different settings on your choosing currency pair and time frame to find what works best for you, okay? Now, I'm just going to give you a few tips to get the most out of the Williams percentage range in your trading. And the first is, do not rely on it alone, all right? Use the Williams percentage range alongside other indicators and tools for a more complete analysis. And then secondly, look for confirmation. Always wait for confirmation signals before entering a trade. All right. For example, you can combine it with support, or resistance. All right. Support and resistance zones, they're very, very important. I always emphasize, the need of making use of your horizontal support and resistance zones. All right. And also making use of your trend lines. All these are going to give you extra confirmations. All right. So when the indicator gives you a signal, for example, we can see that around here we got a bearish signal as a result of this bearish divergence. And you can see that we had a breakout from the support, right? From the trend line support, we had a breakout. So that was an additional confirmation, that validated the bearish signal from the Williams percentage range. For example, if you also want to use other indicators for additional confirmation, you can actually decide to do that. For example, I'm going to add the 20 moving average to the chart. I just did that right now. And you can see that the moving average also gave us a confirmation of this bearish move because we had a breakout to the downside. So it's important that you make, pay attention. It's important that you pay attention to, confirmation tools, right, for more effective signals. But remember that no indicator is perfect, okay? And it's also important to avoid choppy markets. The Williams percentage range works best in trending or volatile markets. In choppy conditions, it can generate false signals. So be cautious. All right. And that is it, traders. Now you know what the Williams percentage range is, how it works, and how to apply it effectively in your Forex trading. This indicator is a powerful tool for identifying overbought and oversold conditions, spotting divergences, and timing your trades with precision. If you enjoyed this video, don't forget to hit the like button and subscribe to the channel for more trading strategies and insights. Tap the notification bell so you never miss an update. Drop a comment below and let me know how you plan to use Williams percentage range in your trading. Thank you for watching, and I'll see you in the next video.